Countdown. Huh? It's the on the counter. Please. No, this is just good. I just usually reuse the bottle for weeks. Oh, I just don't use it anymore. I didn't like it. I like bottles better, so I just drink this. Good morning, good morning. All links here. And we're gonna go live. Morning, Wendy. Pin message. Now it's starting back up. Big show today. Just make sure I've got everything here. Morning, vacation guy. Larry. Yeah, man, it's at 1%. I let my iPad die, I guess. I'm sure this is an iPad Pro from like 2016. It was the first iPad Pro. Why is it not charging? I don't know why it says not charging. It should be charging. Here we go. So, morning, Cam. I'm gonna go through this. Why does it say not charging? Is it not getting enough power through this secondary thing? I got 10 out of 10 on today's Seeking Alpha quiz, just so you know. Gonna go over some stuff. Sienna, top 2026 stock. We will go over that. I had Sidekick look at it. It's in the spotlight. We are going to go over CRDO and all the cable stuff that popped because, hey, CRDO popped. CRDO popped. And it was all because of Broadcom and their kind of stuff. We will go over I'm gonna, the sector rotation. This is kind of interesting. I don't know if I'm gonna bring it up, but I did a chart last night on energy that I shared in the chat on Substack, and so I wanted to go over energy based on this particular portfolio that I set up in July of last year for paid subscribers. Big news that options data is coming to Trendspider. We're going to take a look at BURL, because why is this doing this now? Let's log out. We're just going to take this. I don't know why, but we'll take that and put that there. Anthropic standoff. This is kind of interesting, and it's a good story about Eli, Stock Whisperer. There's a playlist, if you didn't know, on my YouTube channel. This YouTube, whatever. Come on. With YouTube Premium, I don't want YouTube Premium. Skip. This one I show you how I do alpha picks. So it's a good video to look at. Coinbase, I mean, we're back in crypto land. If you didn't know, I think IBIT's quant changed. So we got quite a few watch lists that you can put up into your thing. Apple opened up, they killed it. New Apple Nano. That's going to be just huge. I mean, just in my mind, that's going to be huge. So we'll talk about that. We will talk about the difference between tools, because I do want to show you the difference between tools and kind of how if you're a free user, you're going to use things differently than if you have paid tools, because the paid tools that I use are significantly better. And there's a lot of people who kind of tell me, hey, I'm doing way better since I got the tools that you recommend. So, and did we just get, hold on, there's jobs data that just came out, and I'm wondering, dropped by 92,000 in February compared with 60,000, and a sharp reversal from the 126 added. Oof. Okay. We'll put this in. Bad news is bad news. Jobs data came in light today. So this is not good for the Fed. For the market. The Fed will likely have to lower rates in the face of inflation if gas prices go up. Again, taco trade. I mean, that's essentially it, the taco trade. Morning, Harold. Yeah, Wendy, here, we'll go to the 5-minute after hours and you'll see the jobs data came in and we're just heading down. The market is what it is. And yes, you should be brave in certain stocks. For instance, Micron, what this pop to? This is at 389. It's down 2%. It's traded sideways. So that under 400 has been good. If you want to trade it, you can sell over 400. SanDisk, we know that this one 550, 551 is what Sidekick told us to buy it at. Where is it right now? 553. So if you bought up in the 700s, shame on you. Again, using the tools that I've got, the market teaches patience over and over. And I think that's what today's thing is going to be about. Let me turn on my do not disturb. I think we're, again, I've pointed this out many times before. These indicators don't indicate that we're low enough. It indicates that, you could have some bounces. As long as that trend line is intact, I'm treading lightly, to say the least. So, I had some people email me, where can I follow your stuff? I try not to be, I try and be as transparent as I can without telling it, I don't want to tell anybody this is what you need to do. So, because this show is about me, not you. That's the whole thing. But 4-hour algorithm got you in at 611. It's at 601. We did hit 612, the candle afterwards. So, we haven't hit that since. It only wins 30% of the time. Why? Because when you backtest 2 years and you've been sideways since October, let's see, October, November, December, January, February, and we're in March. It's almost 6 months of just straight on Qs. So, yeah, and NVIDIA's back down, even though everybody was like, oh my God, it's a great one. It's back down to 180. Microsoft, I think you'll have another chance to buy it under 400. Google under $300. Yes, please. I mean, that's, has it gone down enough? Google is below on the weekly. It's below its MAC oscillator on the MACD. And you're 36 on the RSI. At some point, you have to take a shot. If the 193 support doesn't hold, look for it to move back to fill the gap. Let's see. Yeah. I mean, this is just to give you an idea. This is February 2025 of last year. And Google was trading for $200, very much like this year. See how it runs up into the year to 200? You have great earnings. And then ChatGPT comes out and says, we're doing browsers, we're doing search, we're doing all this. And it was said that Google lost. You went down to 150 in April. And you've been climbing ever since. So this January, they release great earnings. What happens? It just continues down. Same exact thing, same exact time period. So, maybe the time to start buying is February. I mean, this is exactly what the market is. Maybe I'll do that on the podcast. Yeah, let's do that. Okay. I'm going to hit record now. We're going to shrink this down. Make this bigger. Okay, I guess I do have two cameras here. Boom. Yeah. Exactly. Opinionated doctor. Here's the thing. And you look at Apple. I mean, Apple's kind of the same thing. It's 258 right now. And I did a podcast yesterday, and it'll come out in a couple of weeks, called Chasing Joy. My buddy Brian is one of the hosts. And I talked about Apple didn't feel good buying back in 2004 when they were, 2005, somewhere in that neighborhood, when they were, just coming out with the iPad. And BlackBerry was eating their lunch because there was no physical keyboard. Everybody's eating Apple's lunch right now with AI and spending and how Apple's going to be weak. Wait until Apple comes out with a Siri powered, a Gemini powered Siri. And every freaking AI app runs on Apple, and Apple's collecting 30% of the revenue. And is it the greatest one? I need to, let me see. We're going to open this. Yeah, non-farm payrolls. I just got to open that. Is it the greatest investment right now? Probably not. I mean, its growth still anemic. It's still 10% where the sector's growing at 10%. Its valuation is an F just because it's up there. But I say this knowing several people who have iPhone 11s who have since upgraded to the 17E, I think it is. And all of my kids who have kids going to college, and they're like, screw buying a PC, we're getting that Nano. Screw buying a Chromebook. We're not going to quibble over a $299 Chromebook versus a $599 Apple device. We're just going to buy the higher priced one because it will last longer, and it's got all the software that they need, all the safety stuff that you just don't need anything else. So, yeah, I mean, again, Apple to me is one of the Apple and Nvidia are the two. And Nvidia, you're buying Nvidia actually cheaper than Apple because you're only paying 22 times forward earnings on Nvidia. And look, all of the metrics except for the revisions are the same, and the revisions are up. So I'm never going to tell people what I'm specifically doing because I think everybody needs to make their own decision. And unless you have 50% of your portfolio on Apple, you're just not me. So I think they've done a genius job in, I mean, how in the world they keep their margins on that Nano, I have no idea. I have no idea how they did it, but a good yeah, I like Microsoft under $400. I mean, Microsoft, to me, you look at that weekly chart just like Google. I mean, it's literally just like Google. And you look at last year in April, look at what it did between, again, their earnings came out on January 27th. Then you had this earnings in April of 2025, and they were good. So I think we're waiting for, this is January 26th. Their earnings came out and everybody screamed that software's, you're bouncing right off that 200. When's the last time you had to buy it at the 200 day? It was April of last year. So I agree with you. I think the Mag 7 gets a bounce at some point. I just think it's screaming buy. But dogs are hitting the thing. Okay, let me hit record. Good morning. It is Friday, March 6th. I've got a big show, okay? We're going to go over a lot. As you listen to today's episode, I want you to listen more to the psychology of the market. You can listen to all the specifics about the technicals and the fundamentals, which stocks I like, which stocks I don't like. But I'm as susceptible to everyone, to headlines. I have said many times before, and I will repeat this over and over and over again. You'll make more money with buy and hold on good companies with good products, good profits, and good management versus trading them. There's a reason, again, rule number one of this podcast is don't listen to a douche on the internet. Do your own research. And by the way, I am that douche. Rule number two is don't listen to Jim Cramer. But Jim Cramer says for Apple and Nvidia, buy it, don't trade it. I'll have several examples of mistakes I've made with alpha picks being what I would consider an exact description. It's the kind of portfolio management that alpha picks describes. Buy and hold good companies with good profits, good products, and good management. And if you're going to hear, all you're going to hear is me going over the tools like you should have Trendspider, you should have Seeking Alpha, you're just a bad listener. Because there are thousands of people who have sent me messages over the years that these tools have helped them. And there are thousands of people who have also sent me messages that they haven't bought the tools and they found their own system. So just understand, it is up to you. I think these tools allow you to work smarter and not harder. So let's go over the markets. What happened in the markets this morning? Well, we got a little downward shock. Non-farm payrolls. This is the amount of jobs created in a month. It took a hit. It dropped. This is not good for the markets. Why? Usually, this one, it's not that big of a deal from 3% unemployment to 4.4, but it is a big deal. You want to know why? Because you're facing inflation right now with rising gas prices. The market is going to underestimate this. Meanwhile, Trump is going to say, I'm not worried about gas prices. Remember, I've said it. Wall Street sinks after oil prices top $80 a barrel after renewed Iranian war escalations. If you think this is a prolonged war, UCO, which is a triple leveraged ETF on oil, maybe a good daily trade. It's leveraged daily. It's not triple leverage for a long term. Just be careful. But remember, this is the same stance that Trump took last year with tariffs. I'm not worried about the tariffs. Remember, this is where taco trade came about. Trump always chickens out. This is the same thing as Liberation Day last year. You're seeing it. Tariffs dragged the market down. Rising gas prices are inflation. So expect market reaction to higher prices and worse jobs market, like we've seen, push that they can't lower rates. That's exactly what you're seeing. Now, in the market, we'll look at QQQ. I've identified, for me, this is the range. And we've been in here for, by the way, at the end of this month, it will be 6 months we've been in this range. If you go back to the first time we did this, this was September. So it could be 6 months right now. But 6 months, this QQQ has traded sideways. And I've said it many times. If you go from a 4-hour, okay, I look at a 4-hour chart usually, to a weekly chart, these indicators seem stretched. That note has been on my chart since October of last year. Go back and look at all the screenshots of the charts that I've done since October. The MACD looks extended. The RSI at 72 extended. Today, the MACD is 9 points, 10 points above the oscillator, and the RSI is at 53. Not as extended, but it could go down. That's why I have this green line. That is a trend line anchored at the low of COVID. It goes back to 2020, just along this line. Now, the validity of a trend line, if it hits more than 3 points, that is more validation that that's a solid trend line. And we're not down to that point yet. You know, the low this week is 591. It's just barely above that trend line, which is about 585. And by the way, when you go back to the 4-hour, where's this low? 585. So again, understand what you're looking at. Because a great example is Google, okay? Wednesday's episode was, be greedy when others are fearful. It's a Warren Buffett quote, okay? And Google is a fantastic example. The 4-hour algorithm, it makes you 91%. You can see it right here. Got you in at 247. Great 24% gain. You know, this one right here that got you in back in June of last year at 174, 38% gain. You've made 4 great trades in this one, okay? And that buy at 314, it just got you out at a 3% loss. But on the 4-hour, you can see the MACD is below the oscillator. The RSI is coming off of really oversold territory at 28. And we just looked at the QQQ weekly. Let's look at Google. Google weekly, okay? Google weekly, it's still extended. It's still extended. Can it come down? Yes. Is this a good buy? Probably. The daily, when you look at the daily, we're under the oscillator. You know, again, the RSI is at 36. Does it make sense to start buying right now? Could be. But when you look at last year and you look at Google going down during the April tariff, okay? They reported earnings and it just came down to this 200-day. Now, do I expect it to come down to 166? No. I expect these indicators to start coming down, and I think maybe you hit 250, but if you want a long-term position in Google, that may be a chance to buy. And look at Microsoft. Same thing. 4-hour hasn't had a great trade since October of last year. And you're down at anything under 400, anything under 300 for Google and 400 for Microsoft. looks like a good trade. And if you look at this weekly on Microsoft, you can see the oscillator's below ever since. Look at this last year trade. Okay, January earnings, January 27th, we went from $400 down to $350 in April, the low. Okay, January earnings this year, we went from almost $500, it was $483, down to $400. So the risk reward needs to be in your mind. Where do you want to buy? Because the taco trade is going to happen. And markets, 3 things to know. Okay, AI chip regulation. Officials at the U.S. Commerce Department have written draft regulations that would restrict AI chips. This is probably not a great thing for things like NVIDIA and AMD. Pfizer expands into China. I'm not into healthcare, so that is completely non-relevant to me. Iranian leadership. President Trump wants to pick who's going to be in front of that. That's fine. Again, it's the Iranian war. If you think it's going to be extended because we're picking the leaders, yeah, probably invest in the oil strategy because oil can go up. It can go over $100. OpenAI, shopping strategy. It pulled back on its shopping strategy. 3 things to know. And QQQ is range bound, like I said at the beginning. Okay? But earnings have been really good. And I want to compare the tools that I use versus the free way. Here is Perplexity. Okay, this is a free tool. Everybody has access to it. You can put this in on a daily basis. I prompted, today is Thursday, March 5th. You're a Wall Street analyst like Mike Santoli from CNBC. I want you to look at the market today and tell me what I need to watch. I also want you to review the most recent S&P company earnings reports from February to March and give me a synopsis of the strength of earnings. What's the current multiple of the S&P? What should that tell me about the issues in the market? Were earnings strong? What sectors shined? And it goes over it. It says markets closed higher, which, by the way, is a hallucination. We didn't go higher. So I want to point that out. You look at the daily candle, it's red yesterday. It's red yesterday. It was green the day before. So all of a sudden, I call this into question. Earnings synopsis, though. This I know is right. Q4 2025 earnings were strong. 13 to 14% growth year over year. 5th straight double-digit quarter. And by the way, I think this market today was looking at Wednesday. Excuse me. But again, the earnings, super strong. Current multiple, the S&P forward PE sits at 22 to 23, above the 5 to 10-year averages, but down from peaks of 26 last year. Yes, this suggests the market's pricing in continued double-digit growth for the full year, but flags risk if earnings miss ambitious forecasts. Again, we are priced higher than average, but not as high as last year. Shining sectors, technology dominates with a 23.7% expected Q1 growth, fueled by AI and semis. Again, AI and semis, communication services, financials, industrials, consumer discretionary also stand out on recent beats, and the secular trends like AI spending and consumer strength. You can go on and continue to have this conversation with Perplexity. It is a great prompt that you can use. But I want to take you over to Trendspider's sidekick, okay? Because I asked it the same exact prompt. I literally copy and pasted. So I want to show you the difference. Good morning. Let me run down the market rundown like Santoli would. The Middle East situation is your primary driver. Iran's conflict is escalating. They targeted U.S. forces in Erbil with drones, closed the Straits of Hormuz, and threatened Israeli embassies. Treasury Secretary Bessent says the U.S. will have full control of Iranian skies within days, but this is serious. Oil jumped to $80. It is far more detailed and far less. By the way, the SPY is down mostly today at 681. Exactly. It's not hallucinating. Pulling back from yesterday's relief rally. The VIX dropped from 28 to 21. Remember, the VIX, oil, and bond rates. Oil rising on Thursday, markets down. Bond rates rising, market down. VIX rising, market down. The S&P 500 earnings. I analyzed 300 plus earnings report from the S&P. The good. Revenue growth remains solid. Tech continues to deliver. Broadcom just posted $19.3 billion revenue, 29% year-over-year growth, and guided up. MongoDB beat by 79% on earnings per share. CrowdStrike up 23% on revenue growth. Energy is the winner. Energy has surged from 50 to 56 in the past month. Retail showing resilience. Target beat. If you haven't seen Target's chart, go and look at it. The not so good. Earnings beats are narrowing. So while they're beating, it's narrowing. The market is trading sideways because those beats are getting smaller. It's not going down because they're still beating. Guidance is cautious. Margins are under pressure. S&P multiple valuation problem. It's trading 21 to 22 times. Perplexity was perfectly right. So while it hallucinated at the beginning, it was perfectly right. Again, work smarter, not harder. This one's accurate. Perplexity is not. You're going to have to know the difference. Fed's Mirren still says that appropriate, but the mod market is starting to doubt it. What this tells you about the market issues: the multiple is stretched. Earnings need to grow. The Fed is boxed in. This is compression setup. If energy stays elevated and yields keep climbing, that 21 to 22 times multiple could easily contract to 18 and 19%, which means a 10 to 15% downside even with flat earnings. Again, work smarter, not harder. This is the information I need in the morning. Sector performance, who's shining? Winners, energy, utilities, XLE, industrial, laggards, technology, consumer discretionary, and healthcare. The sector rotation is classic risk off. Energy is outperforming, telling you that the market is pricing stagflation risks. Bottom line, earnings were decent, but not great. Energy is the standout sector. Everything else is under pressure. The S&P multiple is too high. If we're heading into a prolonged energy crisis with sticky inflation, watch oil, watch yields, watch whatever the Fed can thread the needle. This market needs either a peace deal or a major growth acceleration to justify current earnings. Again, sidekick kicked ass. It told you exactly what you needed to know. Perplexity gave you a good idea. Now, I have 45 years in the market. I kind of know what Perplexity is telling me. If you're new, I'd say Trendspider is probably the better risk reward. Again, risk reward. It's a big thing. And I'll have a big energy update in a little while. But I don't think the market closing higher right now as the S&P closed down. Again, pointing out Perplexity hallucinated. So if you want to sidekick, go and get Trendspider. Go over to the Linktree, LINK. It's literally right down below my head. linktr.ee/dailystockpick and get Trendspider. You can get a 2-week trial. You can get on monthly. Any annual plan gets my 4-hour algorithm. But I'd be more interested in you getting Sidekick. So let's talk about the best risk reward in the market. For me, it's Apple. I am so bullish on Apple. If you didn't see, they announced this Neo, Apple's Neo. It's a $599 MacBook. Imagine a Mac Mini, a Nano, and an iPhone. You've got the complete college ecosystem for about $1,200. Again, it is such a great tool and an ecosystem. I am big on this one. And I can't believe they kept the margins down. Again, with memory being the way that it is, Apple for me, I've said it before and I'll say it again. Anything under 260, I think it's a decent buy. And you can see the 4-hour algorithm, it doesn't do well over the last 2 years. Why? Because 6 months, you go back to September, we were at 260. So 6 months, you've pretty much traded sideways. And when you look at the weekly chart of Apple, again, could it come down? Yes. But I just like what they're putting out. Now, when you go and look at the quant, it doesn't like Apple. It's got it as a hold. Why? Because the valuation and the growth just aren't what they should be. The growth, 10%. Remember, when the stock was at 220, 230, The revenue growth was only 3 and 4% per year. It's now 10%, so it's better, but it's still an F compared to the sector. And that's the problem. But for me, an Apple user, I am so bullish on the new products, on the upgrade cycle, and on Tim Cook and company just navigating this type of thing perfectly. Now, if we go into a recession, good luck. All hands are off. You know, if oil prices continue higher up until June, this one probably comes down below that 230 mark. But long term, I think Apple is a fine risk reward. You know, what does Wall Street think that it's worth? Let's see. 292. So again, the risk, upside, downside. Maybe it's a good bet. But you've got to have your watch list. And the Future Economy Stack, create a watch list. Use this tweet. Okay, I've got one right here. AI infrastructure, AI memory, AI data centers, power, electricity, grid infrastructure, robotics. I put it out there in a tweet. Create a watch list. Or maybe this one that's on Substack. Again, copper internet connect, AI servers, switching network, optical network, copper supply. Again, it's all there. And I will point out, crypto is back. It's screaming. Coinbase and Galaxy, Bitcoin miners, they surge after Trump urges the passage of the stalled crypto bill. If you go and look at Coinbase, okay, it's up 30% in 1 month. 5 days, you're up 14%. It popped last week, earlier this week, March 3rd. March 3rd. You go and look at Circle, which actually reported great earnings. This is the stable coin. Circle over 5 days, 18%. 1 month, you're up 101% on Circle. Crypto is screaming back. He wants to be known as the crypto president. So understand you've got to follow that. And I want to be clear, okay? This is Alpha Picks. Alpha Picks is a data-driven portfolio. You get one pick on the 1st, one pick on the 15th. We just had one on the 1st, okay? The portfolio performance is unmatched. I don't match this portfolio performance. I am a huge investor in Alpha Picks, okay? I put my own money into this. I want to go over the trap, why I'm actually underperforming the Alpha Picks portfolio right now, because I'm making dumb decisions. But it really does highlight the fact that trading some of this in a very choppy market is hard, okay? Somebody who's got years of experience, there are people who are doing it better than me, who have less experience, so it doesn't matter. It is just a hard market, okay? We're gonna go over 2 winners from yesterday. CRDO is the first one, okay? CRDO popped to 114. It's down 4% today, but it popped to 114. Now, maybe you listened to me when I was using Sidekick to go over CRDO, and it literally told me, you know, let's go back here to January, because this is a rinse and repeat. Let's see. Your question, should I add or trim? My trim 25 to 40% at 130, okay? Be patient, let earnings pass, let the volatility settle and reassess. If you want to add more, much better prices are ahead between 85 and 100. That was back in January. And look, February, 85 to 100. Here, right after earnings, 85 to 100, and it popped. So trading this one was fantastic. And I've gone over this many, many times before. The Sidekick message right here saved me 25%. The second Sidekick message on February 25th made me another 25% on that buy. I'm out. I traded it. Great, great use. Up 11% yesterday. And I'll show you why this popped yesterday later when I go over earnings. But I want to go over a second alpha pick. And it's Okta. Why? Because Sidekick got this one wrong. So again, as good as Sidekick is, Eli, the stock whisperer on Substack. He asked me, hey, he's basically bought before earnings. And it said, do not buy now. Wait for tomorrow's earnings reaction, clarity on the full year 2027 guidance, technical stabilization, entry zone 62 to 68. The risk reward is unfavorable. Too much uncertainty with earnings tomorrow and deteriorating fundamentals. The 42% decline has priced in some pessimism, but not enough given the growth deceleration and execution risks. Okay, this weekly chart is not one that I necessarily would say, hey, this looks great, but I've identified that 72 right there as a great support because it was resistance turned into support. We can now put little marks right here as support, and then we can put a little mark right here as support, and it bounced off there. And Eli wound up buying. Okay? Great risk reward. Eli nailed it, not Sidekick. So these are guidance that sometimes are wrong. It is very conservative, is what I would call Sidekick. But let's start out with my dumb move, okay? And why I shouldn't listen to Sidekick as like a one all be all, because again, it can make mistakes. It is very conservative, but I want to bring this up because this is AppLovin, another alpha pick. Okay. I purchased a lot right here. I doubled my position January 29th, and I have exact numbers. I bought at $540 because the 4-hour algorithm had a buy. It beats buy and hold. As you can see, it wins 52% of the time. And then I asked Sidekick about down here. Or I'm sorry, I didn't ask Sidekick. I sold this lot to tax loss harvest right here. Right as it passed that 417, I tax loss harvested it. I sold on February 12th at $377. I was nervous about software at the time. The market had decided software is not going to go. Let's just go back to the market weight. So the key point, I didn't get out of it because I have alpha picks. So I went to the holding percentage. This video, okay, this is back from, 1 year ago. I think it's August 2023, somewhere in that neighborhood. I bought $50,000 of the entire portfolio of alpha picks. I show you how I did it. And they have a holding percentage on the right-hand side. AppLovin's holding percentage is 5% of the portfolio. Now, I asked Sidekick right here at around $400, should I buy this dip? And it said no. It said no. Avoid chasing. Wait for a $360 to $380 price to buy. I think it got down to about $390 or so, somewhere in there. I sold software and AppLovin because I was afraid. I listened to the headlines, even though this was a buy at the time in the quant. Okay, it was a buy. I should have listened 6 months ago. It was a buy, and it was a D, A+, A+. Again, the ratings were there. It's all laid out in this chart where I did things. 366 low should have been where I bought. I should have listened to Sidekick on that one. 380 should have bought it because today you're at $508. It's pulled back to $490, but it closed yesterday at $508. It filled that gap. The key point, I didn't sell all of it. I went back to the holding percentage that you see in the Alpha Picks portfolio. Again, it's 5% of the portfolio. I had it overweight to about 10%. The Alpha, AppLovin, by the way, in Alpha Picks, it's an 1,100% gain. I still enjoyed all of the gains from yesterday and the days before. I do get the benefit of tax loss harvesting. Now I can't buy it back until, let's see, I sold February 12th until March 12th. Key point, I didn't sell. I went back to the portfolio. Again, everything that Alpha picks is a lesson to me. It's just a good lesson. I'm up 212% on the position that's in my portfolio with AppLovin. I am perfectly fine with it. And by the way, on my YouTube channel, I've got this tools that I use, Trendspider and Seeking Alpha. It's a whole playlist that if you want to enjoy the playlist, you can play these videos. This is all on the tools that I use. They're short little videos. They're not huge. But again, these are the tools that I use. And how do you get them? You go to Linktree and just search. The Seeking Alpha one that I suggest is Premium and Alpha Picks, the bundle. It is a great tool. Let's go over a little bit more. Because I want to go over, again, let's go over Eli's example. Because Eli found this Seeking Alpha article. Okay, this is from March 1st from Steve Kress, who is the creator of the Quant and the manager of the Alpha Picks. All of those things. Steve posted this. Claude AI hysteria, top cybersecurity stocks. You scroll down. And there's Okta is number 2. Okay. And Eli saw this on March 1st. And he said, you know what? This is in a drawdown. He didn't see these yellow lines because these are ones that I've put in. But he said on March 1st, this is in a drawdown. 4-hour algorithm has a buy-in here at 73. Let me take the risk reward. Again, he used Sidekick. Sidekick said, hey, maybe it's not a great one, but Okta killed it. And so Eli's enjoying a nice, let's see, a nice 10% gain in 3 days. Fantastic. He took the risk. He got the reward, but it was based on Okta being an alpha pick, the 4-hour algorithm, and this article from Seeking Alpha. So Eli made his money back. There's no science to all of this. This is just taking the input of what you get from the tools that you use. The tools that I use just tend to be a little bit better for me and a lot of people. Year to date, the biggest winner in Alpha Picks, by the way, is Powell. And Powell, by the way, is a hold. This is the biggest winner in the Alpha Picks portfolio. Year to date, 57.79%. And if you go, and I asked Sidekick about Powell the other day, POWL. Oh, maybe I didn't. I thought I did, but maybe I will. Maybe go ask your Sidekick or your AI about POWL. Do you want to buy POWL? Because this one, again, it is a solid stock. 4-hour algorithm doesn't have you in. 4-hour algorithm doesn't beat buy and hold. 4-hour algorithm wins 41% of the time. But I bought and held this one as part of Alpha Picks. Now I want to highlight Sidekick again. Because Sidekick, we had this one on Wednesday. Do a technical setup, okay? Of all the stocks that are reporting from Wednesday, March 4th, to Friday, March 6th, are there any stocks that have really good setups technically to beat earnings and continue to rise in price? What did it pick? BURL. BURL up 5% in one day. We can go over it and look at it right now. If you had bought it, you'd be up 5-6%. Another, I asked Sidekick to do it. It got this one. Had you simply traded it, you could have bought lower and made more, but it was up 7% yesterday. Again, trading, purchasing, buying long-term, Sidekick just does a better job. And Burlington right there, again, is this one that you wanted to buy at the all-time high? Its all-time high is 332. Wall Street has a 15% price target higher. It wasn't bad. I would have never thought to buy Burlington. But again, Sidekick did all of the research for me, gave me an idea. If I thought it was worth the risk and reward, I would have bought it. And FYI, I saw a tweet last night from, this is Dan Ushman, the CEO of Trendspider. For all you options traders out there, options data coming to Trendspider in a week or so. Will fully be supporting the custom indicators too. So you can build your own custom indicators. Custom indicator editor right here. You can build your own indicators. So I want to go over now. let's just go back and see how good I am. Okay. This is a newsletter for paid subscribers, July 30th, 2025. So I said TLN, the power surge, 60% gains, and what's next for smart investors. And I basically went to Perplexity because last year in July, I didn't have Sidekick. So I went into Perplexity and I said, hey, Meta just said the power is the bottleneck for data centers. Are there any power stocks that provide electricity to data centers that are in the news recently that I should research to see if there are buying opportunities? Can you do the research for me? Ask me any questions that might be relevant. And it gave me a portfolio of stocks. So I went in and I created this portfolio. This is the portfolio of stocks. And again, I gave this to the paid newsletter subscribers. This was July of last year. Now, I want to point out something. This portfolio is up 18.79% since then. Happy to say, again, led by an alpha pick name. I own this, AGX. What is it up since I posted that article? 80%. 80%. Again, use the tools you have. I went overweight on AGX during this time. Why? It's an alpha pick. And if you look at AGX, yes, the chart performed really well. Look at AGX. This is July of last year, down at 215. You're at $429 right now. 4-hour algorithm doesn't work really well. Okay, it wins 46% of the time. I went overweight and I stayed overweight, and it's gone overweight now. Is AGX worth a buy right now? Well, AGX right now is a hold in the quant, but it's got the same ratings that it did 6 months ago. And 6 months ago, you're up 103%. Wall Street says it's a buy, but their price target is 16% lower. Again, understand exactly what you have. Use the tools that you have. And I put this into the daily stock pick AI stock, Trendspider watch list. So you can look at it, you can use it. Use the tools that you have. Doesn't mean you can't do anything in the tools that you have. Again, bonus nuclear names, ACLO and NNE, they're both down. They are down. So let's look at energy, because is energy still, you're hearing a lot about energy. Energy is the leading sector. If we go over here and we look at the market data and you just look at year to date, energy XLE is up 26%. The next closest is XLB at 12%. Energy has almost doubled the next sector just year to date. So let's look at energy. 4-hour algorithm got you in here at $44. You're at $56. That's a fantastic buy. Does it have legs? Let's look at the weekly, because again, I've shown you weekly charts. Now I've outlined right here. The breakout happened. Okay. You can see right here at $46. You've got 1, 2, 3, 4, 5, 6, 7 times. It wasn't able to hold over that and came back under it. You want to know a good strategy? Buy above, buy low, find the resistance. And if it can't hold it, then you buy below that and you trim above it. Now, would I be trimming right now? In 1 month and 4 weeks, since you've broken out from below that, you're up 30%. So I went in and I said, hey, Sidekick, can you look at this chart? And I gave it the weekly chart. Can you do an analysis of XLE chart to see if there's further upside on the run? I've circled what I think are long-term resistance with a horizontal line and a trend line anchored at the COVID low. And yes, you can see that that green line is anchored at the COVID low. Also, take into account the top holdings of XLE with their fundamentals against historic averages and tell me if you think continued upside or if I should stay away and wait for a pullback. Looking at your weekly chart, I can see you have identified a critical juncture Here's what the technical picture reveals. The breakout context. XLE is currently at 56.48 after a strong 8-week rally from the mid-April 2025 low around $39. That's a 43% move. You've correctly identified the horizontal resistance zone at 46 to 48 that capped price action multiple times from mid-2021 to late 2024. The recent breakout above the level is significant, but here's the problem. It's overextended, rising wedge pattern, momentum divergence, volume profile concern, yellow circles equal rejection. Holdings performance check, the top 5 holdings, XOM, CVX, COP, SLB, EOG. The fundamental disconnect, all major holdings are showing declining earnings growth despite stock prices rallying. This is multiple expansion, not fundamental strength. Revenue growth is flat to negative across the board. And it gives you the verdict. Stay away and wait for a pullback. Technical. The reason you're buying at multi-year resistance with declining momentum after a 43% rally. Fundamentals, earnings are contracting while prices rally. This is unsustainable. The setup, if this breaks down from here, the next support is 48 breakout level. Then the volume point of control is 45 to 46. The potential pullback, 43. That's the 21-week EMA. Entry zones. First, 48 to 49. That's the prior resistance. Again, 48 to 49, prior resistance. Second, 44 to 45. The best, 40 to 42. So do you buy into this rally? I think the answer is absolutely no. I think you wait for a pullback. But again, nobody knows how long this war in Iran is going to go. Nobody knows how long the Straits of Hormuz will be closed. So is this too conservative? For me, it's fitting my profile. And that's what I like to use the tools that I have. And by the way, I found a new indicator. I'm going to expand this out and go full screen. And I found a new indicator, this sector rotation, which is a great little chart right here in the bottom left. This tells me all of the XLI, XLE, XLB, which ones are actually breaking out. And it's a chart, and you can find how to read the sector rotation. I just asked Google. Use the tools that you have. Leading top right, weakening bottom right, lagging bottom left, improving top left. So if we go over the improving, the top left, it's the blue one. I probably need to do this. It's the blue one. It's XLK. Improving. And we can go back and let me just shut that off. Let's see. Sector rotation chart. I can never. There we go. And I'm going to collapse this list. But if we go and look at XLK now, what is XLK? It says it's improving. Well, this one's the laggard. 133 is your support level right there. How did I get that one? Just from this previous pop-up here back in August. And it's used it several times. We could probably pull this back up here to about 135 or so, and you're at 138. And we know from an earnings, for again, bringing it back to the earnings, we know earnings that tech is leading. Broadcom was a masterclass on earnings. The stock didn't move much, and then it did. Because if we go and look at AVGO from a shorter term perspective, and we look at the aftermarket, okay, of yesterday, you didn't see the initial reaction being that large. Okay, it wasn't huge. It popped, but it wasn't that huge at 332 before it started to level off. But then you use that just as resistance. So where are we trading now? Now that the market just opened? 331. Is that a great price for this stock? I don't know. Let's go over and see what Seeking Alpha thinks about it. It thinks it's a hold. But Wall Street's saying it's a strong buy with a $467 price target. Is that realistic? Let's look at the 52-week range. It only goes up to 414. But again, you look at the factor grade. 6 months ago, it was a C+ with revisions. 6 months ago, it was an A with momentum. Right now, it's a B. Profitability, A+, A+. Growth, it's better growth now than it was. The valuation is about the same at an F. 6 months ago, You could have bought it for 4% higher. It's a better stock today, and you're getting it at a 4% discount than 6 months ago. And meanwhile, nobody's bringing their revisions down. It was a masterclass. This is NVIDIA. This is Broadcom. Again, I think AMD may be the winner. AMD might be a better trade, but this one clearly a better one. And remember, owning QQQ means that you own 12% of Broadcom. Or I'm sorry, 3% of Broadcom. But you own 12% of NVIDIA and Broadcom, the two best chip makers. So you own QQQ, you're already in there. And then what happened during the call? Essentially, the CEO of Broadcom said, you know what? Fiber is great, the photonic stuff, but we're still going to rely on copper. And what did that do for CRDO? It pushed it up 11% yesterday. Earlier, when we were going over Alpha Picks, I said CRDO, it's a great one. It's a great one to trade. CRDO was up 11% yesterday. It's still a strong buy in the quant. It's giving back 2% today. Look at the 52-week range. Now, Wall Street thinks that it's a $199 price target. That's a 78% upside. Nobody's bringing this down. They just had their earnings. Wall Street is still skeptical of this. Absolutely skeptical of this. Meanwhile, Shai is telling you this extends the copper era, which is a major tailwind for CRDO. It's the purple cables. Go and Google it. And Trade Whisperer is saying LITE, Corning, GLW, AAOI, AXTI, and COHR, a top 2026 stock. They are all bullish. And another top 2026 stock, this is why I recommend the premium and alpha picks, because another top 2026 stock, this one, great earnings, another masterclass on earnings. And it pulled back 12%. You're up slightly over 300, but it pulled back. So I went into Sidekick and I said, let's see. Post earnings analysis. This is it. Post earnings analysis. Can you do a post earnings analysis of CIEN, Sienna? The chart is on my screen, including most recent price action, blah, blah, blah. Okay. Sienna, it was the 4-hour algorithm. Strong beat on both lines, recent earnings performance, guidance raised, but the market reacted negatively. The stock dropped 13% on earnings day despite the strong beat. This is a classic sell the news move after a classic run up. This has been a monster. Okay, this has been an absolute monster. If you got into this last year in August at $90 and it traded up to almost, let's see, 350. Let's see, Sienna, what's the 52-week range? It's up 365. This has been a monster. And so I want to know, should I buy this at $300? And so it basically went over everything. Key professional insights. What this means, professional positioning suggests near term 2 to 4 weeks, expect continued downside chop. The 290 puts concentration shows traders expect testing at that level. Medium term, 3 to 6 months, heavy put protection, but also bullish gain spreads, bullish call spreads suggest range bound between 250 and 350. So if you're buying at 300, you're right in the middle. Long term, institutions still bullish. January 2028 leaps, but they're hedging aggressively. The $889,000 April 170 puts is the biggest red flag. A fund is protecting a massive long position, or someone knows something we don't. The most telling signal, the put ratio. The ratio of put premium to call premium flipped from 1 to 3 to 3 to 1. That's institutional capitulation. Don't fight this tape yet. It literally tells me professional money is hedging, not accumulating. Wait for put volume to dry up, the call put ratio to normalize. Support is at 280 to 290 to hold for the next 3 days. So if you can get this under 300, a huge $300 put cluster suggests that near-term magnet is going to be at 300. You're trading at 302. But these earnings were fantastic. And to tell you they were fantastic, Bank of America upgraded them. They raised the price target from 260 to 355. If this stock goes from 300 to 355, that's a solid gain. Again, use the tools that you have. I use Sidekick because I found it better than Perplexity. It's easier. And I have it included in Trendspider. Use the tools that you have. And I just want to point something out. Okay? Mom, how do we get so rich? Your father charged 2% fee to manage billions of dollars. But did his investors actually make money? Who the fuck cares? If you have a financial analyst, the simple question is, did he beat the S&P? Because I've told you, I started this one out telling you, buy and hold beats trading all the time. It's a hard lesson to learn sometimes when you're going through a 20, 30% downturn. But it's a lesson that is historically true. And VOO, which is the S&P 500, doesn't charge you 2% fees, okay? This is a 0.03% fee. QQQ is a 0.018. And if you're just going to buy and hold, QQQM is a 0.15. So again, you're not paying the 2% fees to a hedge fund or to your financial advisor. Know what you own, how you own it, how your fees impact your returns, because buying and holding is by far a better deal. And that's why I think Alpha Picks is the perfect portfolio for me. And if I want to bet something, I'm using premium to find those stocks that are bettable, because I want to know which ones are the top stocks. And when you look at the top stock, it's Micron, it's Coeur Mining, it's Constellium SE. Go and do your research. The quant tells me which stocks are good. CRDO is the number 13 stock. Has it performed? Year to date, you're down 22%. Is it a guarantee? No. The fundamentals make sense in this. The market action doesn't. I like finding those types of stocks. That's why I have both of these. But CRDO is part of the Alpha Picks portfolio. And then I use Trendspider with Sidekick to actually finalize where I should enter, what I should be looking at between daily and monthly and 4-hour charts. So again, understand the tools that you have, go through them. And I started this out. If all you're hearing is that I'm pumping Sidekick, if all you're hearing is that I'm pumping Trendspider, if all you're hearing is that I'm pumping Premium and Alpha Picks, you're a bad listener. Because go and do your own research using the tools that you have. See how much time that takes. And I'll say this again. You can get these tools for on sale for about $1,200 today. Okay? That's the deal. And how big is your portfolio? Because I'll put this a certain way. Because if you're using free tools, that's like not having insurance on your house. How much is your house worth versus your portfolio? Do you have insurance? Because I want to know where the stocks that I'm buying, that I hold in my portfolio are. And so I want some type of assurance that it's a good company with good products and again, good fundamentals and good management. And Alpha Picks just has a knack, and it's a back-tested performance because there's the return. So again, if you have any questions, go ahead and ask. Use Linktree. Go and research the tools. Even my email address is up here. I am available to everybody, and I try and reply back to everybody. Even just comment on us, on Spotify, YouTube, wherever you're listening. Make sure you sign up for the newsletter. Okay, the newsletter is free on days when I do a podcast on Spotify. It's the easiest thing to do. This costs you no money. Just go and get the newsletter. It comes out every day with all of the notes and all of the charts. So if you're listening in your car, the newsletter's for you. I will talk to you later. Have a great weekend. Bye. Oh, Brittany bitch is here. Morning, Camillo. Morning, Dictator. I hope that wasn't too preachy, but I thought it was a good podcast. Who's texting me? Let's see. Where's my iMovie? Brandon, how you doing? I think about you, bud. I hope all's well. Brandon is an OG. And by the way, even though his name is Brandon, he used to join with his wife's. And his wife's name is Brittany. And so he used to join with Brittany's name. So we call him Brittany bitch. Because he couldn't get his own damn YouTube. But he finally did. Okay, I gotta colorize myself so that I don't look deadly pale. By the way, I did a podcast yesterday with my buddy Brian called Chasing Joy. Let me see. Spotify. They're gonna come out. This is it. Chasing Joy. And I gotta tell you, it was funny because their quality is so much better than mine. But they have like no listeners. So I'm hoping people join in to listen to my story about chasing joy. Good to hear your spirits are up. And welcome to the podcast. By the way, Brandon has like 15 kids. And I think he's a lawn guy like me. I got to tell you, I got to spray today. Yeah, I think CRDO to me just, and even Steve Kress says, it boggles his mind how bad this stock has done. Sidekick was great with this one, though. Sidekick basically says, I know this isn't much, but preservation of capital, Goldman Sachs 170 price target, ignore it. The stock that was set when the stock was at 120 and the margins were expanding. The world has changed. This is a sell trim, not a buy the dip. I'm sorry to be the bearer of bad news. If I would enter, it says 70 to 80 if fundamentals still intact in Q4 earnings. It's basically preaching waiting until the next earnings. So sometimes it's just a little too conservative for me. What's your confession? Yeah, I mean, again, yeah, to Larry's point, one of my favorite ones is this when you look at profitability, return on common equity. This refers to the return that equity investors receive on their investment. Return on common equity is used by some investors to assess the likelihood and size of the dividends that the company may pay out in the future. It's 152%. I love that. I mean, again, risk reward for me, it's a solid stock. I don't mind having half my portfolio in that. Do I love it? I thought the podcast today, I was more excited about it last night than I am today. I think I rambled on a little bit. IXHL. Oh, a biotech? Oh. Honestly, yeah, you got reverse split, 1 for 30. Oh, what are you doing? I did that before with UCO. So here's my UCO story and why I'm a little hesitant to kind of trade. I do tell people you should buy UCO. I mean, just look at that since the Iraq war started. It's done well. But my story on UCO is if we go to a weekly and we go back to COVID, this is a chart that I did for my friend who was still in this. This was April of 2020. I was in this for that 1 week, 81% drawdown. I was in this because we saw it flattening out here. This was before we had the 4-hour algorithm. And we saw the MACD was super low. I didn't double down because I already had, I think it was around 100,000, 150,000. Now, mind you, this is after losing like 40% of my portfolio. And so I doubled down on this and it was a reverse split that killed me. Maybe, no. Yeah, it never got back up to the price. We were buying, there was a 4-for-1 reverse split back here, I remember. But my friend, I had told her to buy this. I said, you know what? I'm burned by this. I'm not getting back in. I just want to stay out of it. But she bought in. And I told her, I said, here in 2022, I said, you need to sell this. I said, it's triple leveraged ETF. You need to sell this at 50. And she didn't. She waited until it was down here at about 25. Now, she bought way down here at $5, so. Yeah, but Eli, you're like mountain time. I don't expect you to wake up for it. Let's go and do a thumbnail. I've got to do a thumbnail. Let's see. YouTube thumbnail. What's the title of this one? Stop trading like a maniac. Stop. Oh, you're in Japan. Skiing? Well, it's too late for skiing in Japan, isn't it? Or are you doing memory stuff over there? Oh, do they have 70 million in cash? Yeah, but they are barreling through that cash. They have no income, Brandon. No income whatsoever. I forget how I find the cash. I think I usually just ask. How much cash does IXHL? Oh. Cash does IXHL have on their balance sheet and how much they losing every quarter. Let's see if this gets through this. Yeah, I did talk about AAPL. I did talk about my trade. Here's AAPL. Here's the chart that I brought up, Eli. And it's hard to see because I used yellow a bunch here. But I bought here January 29th at 500. And then I sold here because it broke that 417. Now I sold at this low at the low was 367. I sold at 377. So I took that as a tax loss harvest. I asked Sidekick where I should buy. and it said you shouldn't buy here. Wait to 370, and that was February 18th. By February 24th, they had hit 366. Should have bought there because it gained confirmation right afterwards. And now it's, yesterday it hit a high of 507. So 511. And it's still, by the way, not even at its, let's see, cash position, 68 million in total cash. Quarterly loss of 6.5 million for the quarter. Is cash reserves to fund operations with approximately 4.4 million in cash consumed during the most recent quarter. Yeah, but I mean, they're still diluting. Oh, that's a headache. Yeah. Hey, you did your research. I mean, that's the thing. And that's the key part. You know what you can lose. But this at 500, you're just at midway between your 52-week range. And Wall Street hasn't exactly, well, I guess they have since the earnings. They brought it down to 648. But again, at under $500, I don't know if the market's going to turn around or not, but let's see. I want to stop. Yeah, we'll use this. Stop. Trading. Let's see, uploads. Do I have a Gary? Oh, let's use Google. Let's go to the Google. AI Studio. And we'll upload a download. Oh no, I don't want that one. Let's do upload files. We'll do this one. You whistle in my mouth and safety vest holding a stop sign and yelling, pointing at someone who needs to stop. Run. Let's see. Yeah, Brandon, email me. I'll message you on Twitter. Oh, no. Face more of a whistle. Towards run. Let's see. There we go. That's a good one. We'll use this. Upload file. And there we go. Uploads. Copy. And we'll shrink this down. No. Do 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 do. Yeah. I mean, there's so many that I want to trade, Eli, that I just don't. Okay, we're going to down. And part of that is, you know, I was chatting with somebody on email, one of the listeners. I feel like I'm very diversified with the amount of alpha picks positions that I have. I only have, I'll tell you, in my portfolio, like my brokerage portfolio, in my retirement account, I have a lot more stocks because I'm a little bit more in there. But in my brokerage portfolio, I have, this is including QQQ, VOO, XLK, and XLY. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 positions. And that's including the ETF. So half those positions, you know, that includes Apple and Amazon. It's insane week. By the way, Austin just messaged me for IPI. This is the one that he brought up to me. Holy crap. You got to be kidding. IPI's up another 6%. I should go over here. I'm going to message him over here. Yeah, go follow Austin on Rich Habits. That's a great thumbnail, by the way. But good God, what is IPI? So Austin, basically, we were chatting. It's a strong sell. This is crazy. I mean, but it's only 2 analysts that cover it. And they have tons, by the way. They have, let's see. Can you tell me about the market position of IPI, the cash they have on hand, and why it's up so much recently? Is this a good... Oh, wow. It's ranked number 1 out of 12 for fertilizer and agriculture stock to get into. Let's see. Let's see. Can I share this? You acknowledge that anyone with the link can view its contents. Oh. I just asked Seeking Alpha's AI. Let's see what. Oh. I don't know. Can you guys see this? See if you can see this. Paste. Let's see. Let me know if you guys can see that one. I don't know if you need Pro to view it. It didn't tell me I needed Pro. Wow. I'm watching a video of Oprah. Man, she is taking Ozempic for breakfast, lunch, and dinner. Whew. Let's see. We've got the new episode. Oh, sweet. Sweet. That's so Austin, basically, when I talked to him last week, he's like, dude, this is the greatest thing. He's been in it since January. And crazy. Like the cash position, no debt. And he's like, it's the only potash provider in the US. Strong Q4 earnings. Did they just release earnings? Yeah. God, look at it. March 4th. At 30, you could have gotten it at 36. But the problem is nobody, if you look at this, this is what was interesting to me. The weekly chart of this, we just had the Golden Cross. So if you're looking for a price that it could go up to, this is the Ukrainian war. Yeah, and it's not like these metrics, these indicators. The only one that I was worried about is the 75 on the RSI. But the 4-hour algorithm does pretty good with it. God. See, I need to start listening to douches like Austin. Douches on the internet like Austin and say, good God. Great call on that one. Just what a great call. Let's see. Yeah, let's just go and get. I'm staying on, but look at Fastly. That was Steve's number one. Yeah, I brought up that article, Eli. I brought up you and Fastly. This is insane. I mean, this is a $9 stock that went to 21. And you look at the weekly, same thing as the potash thing. You know, we're about to have the Golden Cross. It needs to get to $11, but the 50 days only at 9, so it needs to move quite a bit. But I mean, good God. Episodes. I mean, Steve just continues to kill it with his analysis of this market and looking for the beaten down stocks that are opportunities. He amazes me. He's got an ability to do this, and he has crafted Seeking Alpha so that it's just so perfect for him. And their product people are just so good at creating that tool that just, you know, and if you think that it's crazy that expensive or any, I mean, the amount of money that this guy probably has made using this thing is let's see. Oh, I didn't do this. Oh, let me. There we go. I gotta take this. I did this, but I didn't do this. Okay, let's copy that. And we're going to paste this. Okay. Yeah, Marvell. I mean, Marvell, listen, Broadcom, NVIDIA, AMD, Marvell, all these chip companies are guiding super bullish. Now, I would totally expect this. If this were a healthy market, Travis, that gap filled to 98 gets filled. Absolutely, 100%. If this is a healthy market, that gap gets filled. But we're not in a healthy market. Now, the all-time high at 120, 125 of January of last year, is that insane to think that they could get back there? Probably not. I mean, let's take a trend line and let's anchor it again at COVID. And if you look at this and you just put it where the trend line should be, where does that get you? It gets you to 108. So where's that gap? 98. Again, you can see that long-term trend just bounce up here in December. And then these last earnings, that's where it was. And these earnings were even better than the last ones. So, Marvell, I think it logged. Yeah. Let's log in. I logged out because I was doing it over on the other side. Wall Street, price target 115. I mean, expect that to go back up. Because it hasn't exactly changed. So, the revisions, these will probably start to come back up in the 90 days. Because revenue was up. It's just earnings per share. So, I think it's insane. It's absolutely insane the way the market is taking this stuff down and not giving them credit. But the market seems to know something that we don't. And that's the dangerous part, is we don't know what we don't know. Alpha Picks. Premium. Pro. Copy. Episode summary. Let's pull this stuff out. And then we'll pull out the AT&T, the Weeble, and the Visible. There we go. Let's upload file. Okay, generating preview. We'll go to the next slide. Your file is still processing. Daily Stock Pick podcast. Paid promotion. Altered content, no. Let's do YouTube tags. YouTube tags. Yeah, I honestly, I don't think it's crazy to buy Marvell. I think it's crazy to chase energy. I don't think it's crazy to chase semis. And there's a difference between the two because we've seen how good those earnings are. But again, can it continue? Or is it going to kind of flatten out a little bit? Oh, let's add a quiz. Okay. We added a quiz. Wait. Back. Oh, I need to add an end screen. Okay. Back. I submitted the rating. And we'll make it public. You too, Wendy. Yeah, LITE. I mean, listen, this one is pulled back a lot. It's at 638. SanDisk is pulled back a lot too. SanDisk is in a buy zone, I believe. It touched 545, so yes, it should be in a buy zone. Let's go to the live. Oh, I can't do it yet. I probably can. Yeah, let's just change the change live. I think it'll change midstream. Live recordings. Save. There we go. Is it going to save? Now it's stuck. Okay. I guess it's stuck. Change is saved. There we go. Stop trading like a maniac. I did this. Let us resize and we'll do an Instagram post and open Instagram. We will put this up top. Put this up top. I'll put this right here. Shrink it down a little bit. And we'll make this let's group. Group. And we'll put text and we'll put this L. No, let's heading linktr.ee/daily stock pick and put this and we'll shrink this down. Okay. We've got that one. We've got this one. I've got to do my Spotfiy. Why is this effing up again? It's inserting automatic ads. I have to wait until this is done to insert ads. Do-do, do-do. Do 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 do. Let's go over to upload this. Dashboard, create new podcast, and we're gonna select file. We'll upload this. Yeah, I think Micron, the only issue with Micron is what is it? Samsung. I was reading this morning. Micron bulls are about to meet Samsung's HBM4 memory chip rating downgrade. He's not rating it a sell. But this is the issue. And it's the guidance. Looking at, despite trading at 11.6 forward earnings, I think Micron is priced for perfection heading into the Q2 26 print. This is crowded trade as evidenced by the 8% sell-off on March 3rd or 9.6% drop on February 4th. Anything either external to the company can lead to a double-digit drop. Overall, I see main key checkpoints that can either extend or break the setup. After a 215% run over the summer, first Micron has guided HBM4 production for early calendar 2026, with Samsung starting to ship HBM4 chips on February 12th, and both players have a similar HBM market share of 20%. Micron needs to catch up. Any slippage in HBM4, but the slippage, it's all contracted. Second, the key bar is Q3 guidance. The street is looking for 21.85 in revenue. Again, as long as they're producing, it's good. I'm downgrading my rating to hold heading into the print. After NVIDIA's post-earnings reaction last week, I think even a beat and raise may not be enough in this macro backdrop. Brent crude spikes above 90 as Trump says no deal with Iran except unconditional surrender. Oh, great. I mean, yeah, that's the biggest issue. What is going on? Okay, let me upload a new file. Let's upload a new file. Oh, I fucked that up. Oh, well. Oh, it kept it. Sweet. Do. So Micron, to me, again, I kind of go to the Wall Street price target of 409. I think it got ahead of its skis. I don't know, but they could have a SanDisk style earnings. Supply disruption from U.S.-Iran war. And South Korea, I mean, let's see the South Korea market. South Korea ETF, EWY. Look at this one yesterday. I mean, this one has been great. Got you out with a 440% gain. No, I'm sorry. 140. 140%. And the weekly still extended. I mean, this 1 week is a 12% drop. So I think that's kind of interesting. Oh, I think I'm going to go. It's 10:30. I don't think I said hit the thumbs up button. I think I got a couple hundred comments, by the way. Everybody's going off about Coherent now. Is Coherent up today? 256. Oh. Look at Shopify giving back all of its gains from yesterday. I mean, I'm down a lot today. I'll give you, this is funny. I get so many emails to my personal email because that's what I'm signed up with. Wow, Bitcoin's dropped 5.1% and Ethereum down 6.1%. Am I down below 10,000 in this account? No, I'm only down 2%. How is that? NVIDIA's holding me up. NVIDIA, iBit, and Spotfiy are my 3 largest positions. My biggest loser, let's see. In my brokerage right now, from a percentage standpoint and a dollar standpoint, it's Robinhood. That's my only loser in my portfolio. And it's because I want to hold this for a year. FYI, I'm only down $2,000. In my Alpha Picks portfolio, my biggest loser is actually Wayfair. By dollar amount and percentage, because I went overweight on that one and I shouldn't have. My biggest loser in my retirement account is iBit. It's iBit and Ethereum are the 2 biggest losers in my retirement account. But those are the only losers that I have in the retirement account. So, but that's it. My Roth, do I have losers in my Roth? I do. Nebius, I'm still down on, but I don't care because I'm just buying under 100 and selling over 100. So that's probably just a position that I have that I'm down on. And Micron, I am down $100 on, which, yeah, I bought at 400, so $399 and change. But that's my personal portfolio. That's it. So there's my biggest losers. Nothing shocking, I don't think. Nothing that I don't bring up on the podcast. YouTube is up. I guess I can start typing out my newsletter. Oh, there's Tony. I'll do it on here. Let's see. 3-6 podcast. My take. Oh. Yeah, and I think, again, put your fundamental hat on. The momentum sucks. The revisions suck. The valuation sucks. So I get why it says it's a sell. I totally get it. I mean, here's the thing. Historically bad. Hood is decelerating momentum, overpriced when compared to other financial stocks. Stocks rated sell or worse have massively underperformed the S&P, as this article will describe. The company has the 3-month performance of minus 37%, while the financials medium is 7.8%. So I completely get why it's that way. Now, Wall Street, they've been chasing it down a little bit, still 66% upside, but that's expensive. I think you're going to get that with a stock that's showing 51% growth, where the sector is growing at 8.7. That starts to slow down. That's an issue. And their revenue growth going forward is at 29%. So you're not going to pay, 31 times. And this used to be like 100 on forward. You're not going to pay that for growth that's actually slowing. And that's the issue. So I get it. I bought it in September at, I want to say 95 or 96. So I'm down on it a little bit. I've gotten rid of the portion that I bought at 130, and I was able to tax loss harvest that. So, I mean, here's the thing. I've got so many gains that even if I lose, I can write them off. It doesn't feel good to lose, and it's not a great strategy to lose, but I'm very good at holding my losses, to a minimum. Let's get a taco. Okay, I'm going to go. I'm going to type this stuff out, get this stuff out and ready. There we go. It's inserting ad breaks again. I'm going to go. I got stuff to do. 10:30. You guys have a great day. I will talk to you later. Have a great weekend. See you. Bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.